Up next, let's tackle how investors pick stocks to buy and sell, which is very much like picking items from supermarket shelves. Just like you'd choose the best quality items for your budget at the supermarket, investors choose stocks based on their analysis of a company's value and their investment strategy. Now, where does this buying and selling happen? Welcome to the stock exchange, the marketplace for stocks. Think of it as a grand supermarket where buyers and sellers come together to make transactions. But instead of physical items, they're dealing in stocks. And just like in a supermarket, you have different ways to place your order. In stock trading, these are called market orders and limit orders. A market order is like telling the cashier, I want this item and I'm willing to pay whatever the current price is. Here, you're buying or selling a stock at the best available current price. On the other hand, a limit order is like saying, I want this item, but only if the price is at or below this amount. With a limit order, you're specifying a price limit at which the stock must be bought or sold. So there you have it. From picking stocks to understanding how transactions happen at the stock exchange and the different types of orders you can place. We hope this supermarket analogy is helping you understand the basics of stock trading. Stick around for more insights and remember to hit that subscribe button. See you in our next video.